Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And this morning I was going through the comments section on YouTube. I came across this comment on a video from about a year ago that I did on the market forecast indicator. And somebody said, "Hey, Cameron, I'm having trouble finding these things that you call a cluster. Is there a way to do a search or a scan on Thinkorswim to find a cluster signal?" I can understand the motivation for that question. It's a great question because that indication is actually comparatively rare. Clusters only happen, in my experience, maybe one day out of 100, possibly less. So today we're going to be scanning for the rare Thinkorswim market forecast indicator cluster signal. Should be an interesting discussion. Before we get to any of that, though, let me first of all say hello to everybody that's already chatting in out there on YouTube. Great to see everybody. Hello there, Mighty Mouse and Michael Scott, Andrew Riceberg, Janelle, Grace, David, John, everybody else. Thanks for joining us week after week. We really do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after this live presentation has concluded, well, enjoy the recording. But be aware that you're invited to join us in the live discussion if you'd like to be here. This is a Friday webcast series. We kick things off promptly, 1 o'clock Eastern. We would love to have you here in the live stream audience. And as that treat for my live stream audience members, everybody should be aware that Mike Fairborn is joining us in the chats. He's going to be addressing any questions that I can't get to. Mike, thanks for helping me out. Mike and I, as we say over and over again, we were working together now for about 2 decades. So Mike brings a ton of experience to this. Mike and I would also like to issue an invitation to everybody watching. If you have an account on X, you should be following your favorite presenters there. It is the very best place to connect with your favorite presenters. I've actually been on X through a lot of the day today. I've been back and forth. If you reply to one of my posts on X, I try to reply right back to you. I probably had 30 replies this morning. So great to be chatting with everybody there. But let's just throw out the reminder. You can find Mike there at Mike Fairborn CS. You can find me on X at Cameron May CS. But let's get into this. As we do, of course, any approach to the markets, if it carries the potential for reward, there's also the potential for risk. So we need to bear that in mind. These disclosures are important. So pay attention as we go through them. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment or research. And investing involves risks, including the loss of principal. All right, so with that important stuff accomplished, let's set the agenda for today. So if you're not familiar with this webcast, you should know that this is part of an ongoing series. So we're going to be looking at some previous trades that actually just concluded since we last met. Then we're going to take a look at the markets. We're going to see what's going on there, and we're going to use that as the backdrop for planning and placing a new trade. And today we're going to be using the market forecast indicator, which is exclusive to Thinkorswim platform, to plan and place today's trade. And we're going to be looking for specifically what's known as a cluster signal, not a common signal. So can be helpful to know how to go find it. But also we should be aware, as we discuss this signal, that this is a signal that generates entries typically when fear is quite high. So we're going to be venturing into maybe some stocks at moments when other traders might be fearful. That is what we just need to be prepared for. In any case, we'll talk about how the indicator is constructed, how it generates a signal. We'll go look for those signals, then we'll plan that trade. So let's go right to the Thinkorswim platform. Let's see what's going on, what has happened to our 2 positions that we left off with last week. They're both done. So first of all, we had a position on advanced micro devices. This was actually a second trade that we've taken in recent days. And this was on a strategy set consisting of Heikin Ashi candles and a 9-day exponential moving average. So it was constructed specifically to look for short-term trade signals. Now, if you didn't happen to catch these discussions, that's okay. If you don't know the logic of the indicators, how they're built, how they might be used to generate signals, as we move on to new things each week, you can go back and watch the archives for these. So do yourself a favor. If you are new to this channel, make sure, first of all, that you've subscribed to the channel. You can go down in the lower right-hand corner, click on the subscribe button. It only takes a second, doesn't cost anything. But our Trader Talks Schwab Coaching webcast channel on YouTube is where we house the archives for our previous webcasts. And we place those under what we call playlists. So I'm going to go to the Trader Talks Schwab Coaching webcast homepage. Just search it up on YouTube. Click on playlists. And then I just need to find this webcast series. So this one again is called Advanced Charting Techniques. And if we scroll down a little bit, it's right about halfway down on the left here. That's where you can find the full playlist of previous webcasts. One of our trades that we're going to be following up on today was our anchored VWAP trade. The other one was our Heikin Ashi candles. Let's scroll on down and look for building a short-term trade system with Heikin Ashi candles. So that's where we discussed the one that we're showing right now. So let's go right to it. So here's our Heikin Ashi trade. What we noted a few weeks ago when we had that discussion was that our Heikin Ashis had been showing weakness. There was a reversal pattern right here, and then we started to move into a period of strength as the 9-day exponential moving average was rising. Heikin Ashi candles were closing above that, so we took an entry right here with the plan to manage a stop $2 below anytime we got a penetration of that 9-day exponential moving average, move that stop up. And in this case, we ultimately got stopped out right here on this big red candle day, stopped for a 1639 profit. That was about 11.2% realized there. Then, after getting stopped out, we noticed, hey, wait a minute, this is starting to strengthen again. We got another white candle, prices closing above that on 9 exponential moving average. We took a re-entry, same management technique, and in this case, the stock actually reversed fairly quickly, and we got stopped out right there. Stopped for a 62-cent loss, or just about 0.5%, 0.4%. So that's the trade history for our advanced micro devices. So that trade is done. I wanted to revisit that because that just happened over the course of last week. Matt says, is this discussion for options trading? Now, Matt, I typically keep it to stocks because I want to focus mostly on the charting and not on the strategy that's being employed. Because if I go into options, then I have to explain the whole strategy, and it eats up precious instruction time when really the focus here is intended to be on the charts. Doesn't mean that the techniques being used here can't be used for options. It's just that that's not what I do, okay? But I actually do teach webcasts on options trading all throughout the week, so you can check out for those. Anyway, that's trade number one, done. Let's go look at our Netflix trade in this week's volatility. This one also got stopped for a pretty modest loss, but in this case, it wasn't a exponential moving average and the Heikin Ashi approach, although it looks like in recent history on Netflix, that might not have been a bad trade. In any case, let's switch this up. We use traditional candles for this. So let's switch our chart type from Heikin Ashi back to traditional. And let's load up our study set to our Netflix anchored VWAP. It was last week's discussion. And what we noted here was that there were a couple of major reversal points recently on Netflix. And for anchored VWAP traders, they will commonly anchor that volume weighted average price right at those reversal points. So we anchored one here, we anchored another here, and we noted that the VWAP line had acted as a recent support on the longer term one. On the shorter term one with the reversal right up here, there was a penetration of price breaking through that VWAP line, which is commonly an entry signal. So we took an entry signal on the evidence of the strength off of this longer term VWAP on the breakout of the shorter term, with a plan that if we happen to slip just one standard half a standard deviation below that VWAP line, we'd get out. That's what this red dashed line is here. It's kind of disappearing behind my text, intersecting with price right there. We were stopped out. So we'll see if that turns out to be the right decision, but it is the decision. done, stopped out at 37.63, having entered right here. So you can see a little bit of a loss right there, down 3%. Scott says, is this a possible bear flag? Could be. It could be. If you're talking about, Scott, this being the flag pole and this portion right here being the flag itself, the one technical hesitation that some traders might have is that a bear flag, a true bear flag, is typically seen as a continuation pattern rather than a reversal pattern, which means that price would have typically been coming down before the start of the flag. And in this case, it looks like it was going up. Now, maybe you're talking about some other time frame, but that's the only real bear flag candidate that I can see, and it might be disqualified on the evidence of the strength of the trend leading into the flag. Anyway, trades done. Want to do a quick follow-up on those. We've had a nice stretch of winners. Sometimes we lose. That's the way trading goes. So now let's go have a look at what's going on with the markets, and then we'll get to our strategy of the day. So what's happening with the S&P 500? Well, I think a lot of you are seeing the strength off of Jerome Powell's comments earlier today. I think traders might have their eye on, is there a September rate cut looming? Might there be more in the rest of 2025? Obviously, a tale yet to be told, but to look at the chart through the technical lens that we apply each week, let's bring up our study set for the S&P 500, which is our TVM, also known as a trend, as our trend value momentum strategy set. And yes, there's an archive for this. You can just go look in my archives, look for trend value momentum, or TVM. Actually, let me just show you that. Yeah, you can go to the archives just on the home page or at the top of the screen. You can just click here, search for TVM. There it is, understanding the trend value momentum chart trading system. But our system here is a combination of 4 indicators generating 3 signals, first of which is trend, second of which is value, and third, momentum. For a user of this indication combination, they'll look at a moving average. This is a triangular moving average, also known as a double smooth moving average, an indication of trend. And we compare that to a longer term indication of trend. And if our shorter term, our 50, is above our longer term, our 100, that's commonly interpreted as a confirmation of continued bullishness of a trend. Yeah, John, no cut today. That wasn't on the schedule, but September is what they were looking for. But looking down here at RSI, this is our potential indication of value. And this was coming down, started to strengthen recently. It's sort of in no man's land, but rising above 50, pretty commonly interpreted as being bullish. Now, finally, this might be the most short-term, technically significant development for today. Our MACD histogram, our momentum oscillator, which can rise through really strong bullish momentum, but fading, or dropping into really bearish momentum, but then reversing to start moving more bullish. When we see our red MACD histogram bars transition from bright red to dark red, that is commonly interpreted as potentially leading into a period of growth for price. Means that the selling momentum, which had been sort of prevailing has shifted maybe to more buying momentum, selling into buying. And you can see recently we've had a shift right there and price advanced. We had a shift right here and price advanced. We had a shift right here and price advanced. It's not a guarantee. No technical approach is a guarantee, but it's interesting that if you squint, you can see today's histogram bar is shorter. It's darker. Might be a confirmation of bullishness in the very near term, not just a bullish trend, but momentum returning to the buyer's side of the equation. So looks like check, check, check for bullish, bullish, bullish. A lot of technical evidence, not a guarantee that we're definitely going up from here. We'll see. But we are going to use that as the backdrop. Let's just say that our trader is bullish. Maybe they think right now is a time to go out and look for new stocks. And maybe they were watching that video that I did a year ago. about the market forecast indicator. And I thought, oh, that cluster signal that Cameron discussed, that sounds interesting. I'd like to maybe put it to paper money test, but I can't find any signals. Let's address that right now. I'm going to come up here. Let's remove our studies. Go. And we're going to instead add the market forecast indicator. Now, as I do this, chat in, let me know. We got 207 people watching. How many of you have actually learned about the market forecast indicator before? Up here at the edit studies icon, I can just go down in alphabetical order down to the M's, or we can just type in market forecast. Let's just do that. Little shortcut. There's our market forecast indicator. Let's add it to our chart. Let's click apply and click OK. Stephanie, you haven't heard of this one? Ocean Life, you have? Okay. Yeah, Jay Richardson, yes. Lagoon, not you. Janelle, not you. Okay. All right. Let's make sure that everybody knows how this is constructed. Now, this is a proprietary Thinkorswim indicator. You can't find it anywhere else. So I'm not going to go deeply into the construction, meaning providing the precise algorithm for how it's constructed, but it's not difficult for me to explain it. Really, what we're looking at here are 3 stochastic oscillators of different lengths. If you're not familiar with a stochastic oscillator, much like the MACD, it's sometimes used to identify, for shorter term to intermediate term traders, shifts in momentum. Now, very short term traders might use a very short term stochastic. Let's say those that are trading over a period of maybe just hours. There's another group of traders that might be using a little bit longer term stochastic. Maybe they're trading over a period of days. And finally, you might have some traders that are trading over a period of weeks, and they need to slow that signal down a little bit. So they use yet another stochastic oscillator time frame. That's basically the concept behind this. We have a very rapidly changing stochastic oscillator. It's shown here in red. We have another one that's a little bit slower. The red one, you can see if you just focus your eyes on the red, it can change direction overnight. It'll typically go up for maybe a day or two and then reverse and head down for a day or two. Very short-term shifts in momentum. The blue line is also known as the near-term line. So the red has a label. It's called the momentum. That's just what it's called. Anyway, the momentum stochastic indicator. Then we have the near term, which is the blue line. It'll go up for a few more days and then reverse. It's a little bit slower than the red. And then finally, we have the green one. And you can see the green one is just the slowest to change direction. It can actually go down for days to weeks before finally reversing. It can go up for days to weeks before finally reversing. So it's the slowest of our stochastic oscillators here. And it might be used by that group of traders, at least conceptually, that are looking for those slower signals, slower to get in, slower to get out. All right. I want to make a customization here to our indicators before we talk about how this might be used to identify something known as the cluster signal. So I'm going to go back up to our little flask icon, use the little gear here for our market forecast indicator. And I'm going to customize this just to make it a little bit easier to see the lines, but also I want to highlight one in particular, and you're going to see how this is going to make life easier, potentially. So let's make our red momentum line a 2 in thickness, 2 out of 5. Let's make our blue near-term line a 2 out of 5. But our intermediate green line, the slowest one, we're going to give it the biggest thickness, 5 out of 5. Okay, click OK, click apply. So that's changed the appearance a little bit. Now, I'm only doing this for convenience purposes as an instructor. It's not necessary to do this. The signal would function just exactly the same way without making the lines look cool. Anyway, but I do want to highlight in the identification of this signal, a trader's eyes very commonly first go to this green line. Okay? But let's talk about the signal itself. So for all of these oscillators, they're range bound. They float between a lowest extreme of 0 and a highest extreme of 100. So can't go below 0, can't go above 100. That's true for all three. With each of these, if we happen to dip down below 20 on its value, Zinc 560, does this look a lot better? Good. Glad you think that. That was my intent. Anyway, for each of these oscillators, if it happens to slip down below 20, we borrow some familiar terminology from other oscillating indicators, and we refer to that as an oversold position. For traders of each time frame, they might see that as, ooh, in the short term, this looks like prices have gone down. At least the momentum has maybe carried prices down over my preferred time frame into an oversold condition. So that's below 20. Now, to the opposite extent, if we get above 80, some traders will say, all right, looks like this is overbought. Maybe it causes them to hit the pause button on any new trades that they're planning to take. That's it. So I'm going to show you another thing. I'm just going to do it for purely visual reference purposes. Let's draw in a line. I'm going to go to my drawing tool. I'm going to choose the horizontal price line tool. And I'm going to draw in a line right at 20. Here's a nifty little trick. If you want to get a line really precise, just draw one in. I want it to be at 20. You'll notice I sort of slapped it in there. It's at 30.93. Then you can right click on the line and edit it and just change its value to the value intended, 20. Click OK. There we go. So now we have a line at 20. Super quick. Only take the second to slap that in there. But now now that we understand how what the lines are, how the stochastic is typically interpreted, how this indicator is built, how might it generate a signal? Well, think about this. If each one of these is intended to measure momentum in a different time frame, one over hours, one over days, another over weeks, if all three of those happen to reach an extreme position at the same moment, where we're oversold on a period of hours, on a period of days, on a period of weeks, where might the trader think it's likely to go from here? All three of those may convene into a cluster signaling possible reversal. Yeah, a trader might think to themselves, well, if everything is oversold at once, maybe there's only one way to go, and that's up. Now, obviously, no, the stock can still go down. The index could still go down, but that's the concept underlying this signal. And it is not a common signal. You might think, oh, it should happen all the time. Nope. First of all, look at how our longer term oscillator tends to stay, especially in a bullish market condition, it tends to stay above 20. It's very reticent, very unusual for it to go down below 20. So during those time frames, our trader isn't even looking for clusters. Guess what? If I'm trying to look for an S&P 500 cluster on today's chart, nope, because look where the green is. As long as that green is above 20, the faster oscillators, doesn't matter if they dip down below 20, the green's not joining the party, it's not a cluster. However, when the trader notes, ooh, that green has worked its way all the way down below 20, now it's just a waiting game. Because it's quite possible that the red momentum line could just take a quick dip, and we've got 2 out of 3. And then that blue near-term line, which is also pretty fast, it could take a quick dip, and we have it. We've got all 3. So Rita says, how did you get to exactly 20, Rita? So I showed how to do that. I don't mind showing it again. Let me right-click on this. I'm just going to remove that drawing. But first of all, I use the horizontal price level tool, not the trend line tool. Okay? So this one, it's only at one level. Okay? So then I can just slap in a level and then right-click on that and edit its properties to my preferred level, 20. That's it. It's exactly 20 now. All right, so if we have the green line, the green, I'm trying to use their proper names over and over again so you get used to it. I'm just going to go with green, red, and blue. Is that okay with everybody? So if our green line is holding out above the 20, that's a nice shortcut for our trader who's looking for clusters. They know not to look for them right now. If it slips below 20, that's when we're on high alert. So if we look at the whole last 12 months for the S&P 500, how many combinations of days did we have where all three were clustering below 20, either within the same trading session or within a 24-hour period, the same 24-hour period? So there are a couple of schools of thought on the identification of a cluster. Some traders are absolute purists, and they need to see all three under 20 within the same trading day. Others will say, well, you know what? If my market forecast line has dipped down below and has popped back up above, but then let's call them blue and green lines have also gotten down below 20, as long as it's within 24 hours, like within one trading day of each other, that might be considered a cluster. But in any case, it does not happen very often. Right here, I can see a cluster. You know what? I'm not going to draw this in. Let me remove this because I cheated and went ahead and made some drawings in advance. So let me just throw on the S&P 500 market forecast cluster. Did I delete it? No, that's it. Okay, good. So this is a drawing set that I have drawn in that identify those 2 times all year. Now, John says, why is it based on 20? John, that's just what the trader's trying to identify is when that momentum has carried to an extreme over these 3 different periods of time. And we might look for extreme lows and extreme highs. Well, there has to be some definition of extreme. For some traders, it might not be 20. It might be 25. It might be 15. That's up to the individual trader. It's just common that 20 is that dividing line. And that's common across a whole bunch of, how many other oscillators can somebody chat in for me and let me know where the oversold happens to be at the 20? It just means that we're only below that level about 20% of the time, basically. Yeah, that's right, Kelly. It is a range. Yeah, so we're at the lowest 20%. We're at the 20th percentile or lower for the total range of possibilities for our oscillator. Anyway, so there's a cluster right there. This cluster happened just right here on this day. That was April 7th. And you can see from there, that one did a really nice job of calling bottoms. And earlier in this discussion, so let's put ourselves in the shoes of this trader who's using the market forecast tool to look for major reversals on the S&P 500. And we see this signal back here in that first week of April. What was going on with just prevailing market sentiment at that time? Were the headlines very positive, or was there a lot of panic in, let's just say, the average investor out there? Yeah, this particular signal is intended to generate entries at times when fear is at a peak. It's going against the general market grain. And if a trader's not comfortable with that, then this may not be the indicator for them. I just want to make sure that we're aware of that. And it doesn't always work perfectly either. You can see the other signal that was generated back in March. It actually didn't do too bad of a job calling a short-term low, but that one actually fairly quickly fell. But for a lot of traders, they see the potential of getting in at or near significant lows that might be worth some false signals along the way. In any case, there's our cluster. We can see how rare it is. We can see its nature of sort of being counter prevailing trends. It generally is generated at times of high fear. But going back to the question is, how do we find these things if they're so rare? David says, be greedy when others are fearful. You read that at times, right, David? And sometimes it works. Sometimes, yep, there can be risk. It doesn't work, and maybe there was a reason for the fear. But let's go build a search. Now, this is going to require using using study filters in the thinkorswim scan tool. That's only available on the live platform. So I can't go here on my paper money and go do a scan for this. So let's bring up our live platform. And by the way, if you didn't know that you can have both up at the same time, you can. So if you've already launched thinkorswim, just come to your thinkorswim logo and right click on it. And then just click on thinkorswim again, and it'll bring up that username and password pop-up. You can just fill that out, switch it over to live. I will also switch this color scheme to black, so I'll know, okay, my white background is my paper money. My black background is my live platform, so I'm not doing any live trading when I don't intend to. In any case, both of these are just practice for me. These aren't actually real accounts in either case, but let's do a scan for these clusters. So the scan I'm about to show you, some scans are pretty complicated. This one, I don't think it is. First thing we're going to do, though, is just start from this default scan. We don't need these stock filters. I'm just going to click those out of there. But I am going to direct this scan and we don't have to do it this way, but I'm going to direct this one to just look through companies in the S&P 500. The question I want to answer to myself right now is, I wonder if there are any S&P 500 companies with a very recent cluster. So we're going to scan just in the S&P 500. So here's how to do that scan. We're going to go over here and add a study filter, which means a chart filter. And we're going to do a custom chart filter. So that brings us to our custom filter tool. We're using the condition wizard. It doesn't know which indicator we want to use, so it just has the alphabetically first one loaded up, ADX crossover. I'm just going to delete that one and add my own condition. And the specific study that we're going to be using today is the market forecast. So let's start typing that in. Let's choose market forecast, and you'll notice there's a familiar term here now. So Cameron, where do you want that momentum line? Well, I would like that momentum line to be less than a value of 20 within the last 3 bars or days if I'm looking at a daily chart. All right, so I can save that. So that's going to be looking for a red line to be below 20 within the last 3 days. Now I'm just going to repeat that and do it for the blue line and for the green line. So let's add another condition for the study called the market forecast with the near term less than a value of 20 within the last 3 bars. Save that. And finally, we know how it's done now. Let's just go through it one more time. The repetition is nice, isn't it? Market forecast. Intermediate is less than, so that's our red line, pardon me, our green line, a value of 20 within the last 3 bars. Now, obviously, it doesn't have to be the last 3 bars. We could do 4 bars if we want possibly more trade examples or signal examples, and we're willing to look back another day and maybe another 2 days or whatever. If we start to go back much more than that, this indicator, it's not very common, but it can also start to play out fairly rapidly if the stock starts to move. And so finding signals that happened a week ago or 2 weeks ago, maybe the trade is still legit. Maybe it's already used up a lot of whatever potential it might have originally had. In any case, let's save that one and then just click OK. So what we're seeing here is with the market forecast, momentum is less than 20 within 3 bars. The near term is less than 20 within 3 bars, and ... So we go, and so on. In any case, let's see if there are any S&P 500 companies with signals within the last 3 days. Let's click scan, and it'll have to think. This one's a little bit slower. I'll prepare you for that too. Sometimes that one takes an extra few seconds to run it. David says a purist would use 1 bar. Well, maybe. Even a purist might still say, if I can see a signal within the last few days, as long as the stock hasn't moved very much, they might still be okay with that. But yeah, if they're, number one, a purist, and number two, they only want signals that were generated today, yeah, maybe just use that one day. All right, so it looks like we have a range of stocks here. A lot of them should be familiar to you because these are S&P 500 companies. The one that I wanted to show you today was Supermicro. Yeah, I ran this scan about an hour ago. Interesting things happening on Supermicro. First of all, I know that all three have been below 20 within the last 3 days. You can see that right here. There's our green line below 20. There's our red line below 20. There's our blue line below 20. The lines have started to move, but notice the stock has only just started. Interesting that our stock today, after a pretty good sell-off on this earnings announcement, has had what might we call this? When you have a big white candle, looks like it could swallow up the previous red candles, known as a bullish engulfing. Some of you are going to say, Cameron, this thing's going down. Guess what? That's what a counter trend signal is supposed to do. It's supposed to look for stocks where another technical trader might be quite fearful at this moment. Now, you might say, well, it's also at a support level. That's a possibility, but I think that's a good example, though, of this is a signal that encourages investment at a time when others are fearful. Doesn't mean it's going to be perfect every time. But let's see what it's done in the past. This one has generated signals 4 times this year. It's actually not too bad. Hey, that's every few months instead of twice a year like the S&P 500. But every few months, by the way, that works out to be about 1 out of 100 days. But what happened with the stock previously on Supermicro when it generated these fear-confronting signals? Well, it did a pretty good job of identifying lows. Was it exactly correct every time? Nope. Show me the indicator that is. But it wasn't too bad. You can see what the stock did in the weeks and months following these signals. So let's take a position on this. Let's say that our trader is using the evidence of this recent cluster and they're ready to enter. Well, that's the fun part of the trade. But how do we manage the exits? Well, as is so commonly the case with so many oscillators where we're looking to buy in at lows, maybe the plan is to just take profits if we can get back to previous highs. So we might identify areas of resistance. Now, there is a gap here, so there might be an initial resistance right here. There might also be a second area of resistance at the top of that gap window. But let's say our trader is fairly optimistic. Maybe they want to get up here, up to that $62. Thaya says, can I show the construction of the script? How about I do this? I don't usually do this, but I'll share it with you. So, and Thaya, you can go back, and this is not a script really, sort of is, but it is just a custom study filter. Let's share the scan query, what we call it, clusters. As I do that, just be aware that shared scans are not guaranteed as a timing or accuracy. But going back to our trade scenario, let's say that our trader is planning to get in here. Could they get out at 49? Just take a short-term gain if possible, if it surfaces? Yeah. Could we get out up here? Yep. I'm going to say, let's call it $62. That's interesting. That was also the previous highs here and here. Wow. All right. So let's call it a target of 62. And if that leaves us with basically $18 of potential reward, how much might the trader be willing to risk? Maybe if let's say they use a ratio. They want at least $2 of reward for every dollar at risk. Where could they put their stop? Conceptually, could put that stop as low as $35. That's right down here. That sounds like it's way down low, but actually, the way that SMCI moves, we could be there fairly quickly if the stock starts to reverse course. Do we want to go as low as 35, or should we just go down here below? So we're just using resistance for planning targets, maybe support, or a ratio of risk to reward. How about with this one? Let's just go a couple of bucks below that support at 37. So there's our plan. Let's go put that plan into action. We'll go to our trade tab. Here's our SMCI. Let's right click on our ask price and put in a custom buy order with an OCO bracket. That's 2 sell orders. This is going to come up with an order to just buy 10 shares. That would be a $430 trade. Let's do 100 shares, buying and selling. I could just link them together by clicking on the broken chain link, but I instead just typed it in. Let's put in a market order, assuming we fill for around $44, but that's definitely not guaranteed with a market order. Let's put in our stop, our target at $62. So canceled. And our stop at $38. Until canceled. There we go. Now this is a stock that moves. Let's click confirm and send. We're going to be buying 100 shares of SMCI at the market price. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from quotes displayed at order entry. Just because it's trading about $44 doesn't mean we're going to be paying $44. With stop orders, there's no guarantee that the execution price that we ultimately receive, will be equal to or even near the activation price. In this case, our activation price is $38. So if the stock is really falling hard, we might not get $38 when we stop that bleeding. So let's send this order off. No commission on this trade, but there can be on some types of trades. And with that, we've accomplished what I set out to do today. So I wanted to have a look at existing positions, take a peek at the markets, and then dedicate the bulk of our discussion to scanning for this rare signal known as the market forecast cluster. I hope you enjoyed this discussion. I thought it was a great question. So when I'm reading through your comments and I read through your survey replies, it helps, guys. It's always appreciated. But this is what we do on Fridays. I certainly hope that you join me again next Friday. We'll be exploring a different set of studies. We'll be exploring a different approach to trading stocks, always attempting to advance that technical analysis learning curve. But between now and then, I have other webcasts. I want you to be aware of some resources that we have outside of the live streams. So as a heads up, if you haven't subscribed to our Trader Talks channel yet on YouTube, please do that now. Trader Talks Schwab Coaching Webcast is the full name of our channel. You can subscribe by clicking on the subscribe button down the lower right or down below the video stream. That literally takes a second. It doesn't cost anything, but this is where we house our playlists of webcasts, the ones that we've already finished. You can join our live streams here, and you can even do searches as I've demonstrated. You can also do this as a favor for yourself. If you have an account with X, you should be following your favorite presenters on X. You can follow Mike there at Mike Fairborn CS. You can follow me on X at Cameron May CS. That is the best place to connect with me in between these live streams. When the camera's not on, all throughout the day, I'm posting things on X and I'm checking for replies. And if you reply to me, I reply right back to you. I think I average probably between 10 and 30 replies per day. So yeah, best place to connect with me is on X. Matter of fact, we go there. Did you see me poke fun at James? Yeah, I asked your input on what's going to go on with Jerome Powell in September. But if you didn't see James flying along on his tube here, he has a pretty good wipeout. He's fine, but he skipped across the water. So yeah, read that. I threw out a couple of dad jokes there. Anyway, guys, thanks for giving me your time today. Go have a great Friday. Have a great weekend. I have Monday off, so I'll see you on Tuesday. Mike, thanks for helping out in chat. That's definitely appreciated. And thank you to everybody who's already clicked that thumbs up button. I can see, as I mentioned earlier, we had about 200 people watching this live stream. 67 already clicked the like button. Thank you. That's awesome. It's always appreciated. It sounds like applause to your presenter when you do that. But it also gives a nice little boost in the YouTube algorithm to my webcast, so more people can find these discussions and more people can learn things like how to look for clusters on the market forecast tool using the Thinkorswim scan tab. All right, everybody, have a great weekend. I'll look for you in a future webcast. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.